Hello, today is the 24th of August. My name is Igor. Let's talk markets. And the most important thing right now is the fact that Fed has basically changed its approach, at least verbally at the moment, and is targeting labor market as its primary objective. The labor market seems to be weakening. So Jerome Powell said that he will consider his primary objective the health of the labor market from now on. And the market rallied immediately. And let's transition to charts right away. So here is Nasdaq. What we see here is this very extended rally, probably as long or even longer at this point than COVID rally, post-COVID rally. And during the previous video, I've mentioned that it has sort of overstayed its welcome, and it turned out to be at least partially right. The whole previous week was marked by this correction, obviously, with the reversal on Friday. So what was it really? I think it was primarily short covering, because it was quite obvious that the inflation is sticky. We're still seeing this mixed data. Sometimes it's a bit better, sometimes it's a bit worse, but no obvious signs of definitive win from Federal Reserve. And the change of objectives was the primary thing which caused short sellers, which were preparing for further downside, to cover their positions. So that was the reason behind the rally, in my opinion. And it also sort of helped to create this overnight change of narrative, because before that it was quite positive. It was moderate, because there are still lots of uncertainties in the economy in regards to tariffs and the most important, the China situation. But for a few hours, it seems like all the problems are gone now, because the Fed is going to print. But actually, in history, it's quite different. And when Federal Reserve starts to lower rates, quite often it coincides with actually bear markets, because why would Federal Reserve cut rates? Obviously, as a response to weakening economy, and that still could be the case. So you got to be cautious here, and to sort of uh, protect my thesis or reinforce it, I'll show you what I don't like in this market. And let's take a look at what's happening in the decentralized finance domain right now. On the top left is Bitcoin. You can see how clearly it lags behind Ethereum, I mean. And today, for some reason, it's getting worse. Yeah, so why doesn't it go up? Why it is so weak? There could be several explanations to that, but for me, the primary one at the moment is that maybe lowering of the rates will not go so smoothly as it was expected, sort of could be expected on Friday. And the second idea is that Ethereum could be leading as a potential new infrastructure which could be used by projects of the current American administration in the decentralized finance space, stablecoins and stuff like that. Same with Solana, and XRP is in the best shape right now. That, in my opinion, could be a sign which points us to a probability of them losing this competition to Ethereum after all. But the main takeaway right now, if you don't take into account my conspiracy theories, is that crypto is quite weak, and why it is weak if the rates are about to go down now. The second problem which I wanted to point out is that for some reason, with the exception of Chinese stocks, I have two of them here, FUTU Holdings, Chinese brokerage, and ZK, automotive producer. Took some pressure. I actually tried to play this one, but got shaken out. Maybe we'll consider it again during the next week. These two look good, and the rest of the stock market, and here I'm sort of selecting maybe the best of the best, did not respond quite well because there wasn't much to respond with, mainly because there are no setups. Setups, basically volatility, contraction patterns, like let me show you, like this big one in Bitcoin, which preceded this attempt to run up. When you have these several waves of expansion of volatility, finalized by a contraction of it, and then a breakout. This pattern is supposed to point us to activity of institutional players, and I just can't see many names with volatility contraction patterns right now. Something looks good. For example, AFRM looks quite okay, but this is not. This could very well be a retail playing or momentum traders running things up, and obviously AFRM is not the biggest. Oh no, it's quite big actually. That's not right. 26 billion. So yeah, this one is interesting. Maybe in a positive scenario, it could consolidate here a bit, contract price-wise and volume-wise, and then proceed to the upside in case we have a bullish scenario at the level of the indices. So yeah, there are a few of names which sort of resisted. Some of them better, some of them worse, this pullback, but there are not so many of them, and that tells to me that either this announcement, if it's bullish and it solves all of our problems, caught everybody by surprise and nobody is positioned, so it could be very good. But at the same time, it could point out that the rally on Friday was short covering indeed, and everything is not so rosy as it can seem right now, and recession is quite real, and Federal Reserve lowering rates should at least catch up with the weakening economy, which is still in the process of figuring out of what tariffs will bring to the table at the end of the day. So yeah, this one is going to be quite brief, and I should also I also wanted to share something with you, a new idea I was thinking about during this week, and I think if you know what entropy is, you could simplify your perception of what's happening in the world and in the markets this day quite a bit. Entropy is basically a law of it's a measure of disorder in the system, and the second law of thermodynamics tells us that systems tend to decay over time. Humans decay and die, countries decay, die and transform and reemerge. Universe is expanding endlessly, and galaxies are increasing distances between them, so we will not be, most likely will not be able to reach any of them, and one day the sky will be dark because everything will be too far. This is entropy. And sometimes it's being reversed, like humanity. Humanity, each human societies, uh, they are an example of reversed entropy. But entropy, as everything in nature, is useful, and it is useful for evolution. It's useful for improvement. So each time there is a crisis or a transformation, each time, quote unquote, Rome falls, it means that the Rome has concluded its evolutionary purpose, created a necessary legacy, and something new should take over. So I think that we are definitely in a similar moment in history, and us as investors, as traders, should start mm, exercising new investment philosophy, which could be called entropy arbitrage. And briefly, it could be summarized like this: extract units of value from decaying systems and put these units of value into systems which reverse entropy. And this, at the moment, I can bring up some examples, and one of them is clearly El Salvador, because this is the country which has reversed entropy successfully, fought crime and defeated it, and now it is attracting capital which is going from the states as well, where some say that entropy tends to increase, or it could increase if we will have a recession at the end of this year. And there are other spots like that. And there are also assets in the market which are sort of inversely correlated or could sustain wealth or grow in the recession. I'll be looking for them right now. For example, these two names I've mentioned before, Chinese names, which seem to be weathering the market fluctuations quite good. Could be the anti-anthropic trade, or maybe some other markets. By the way, let's switch to them too. And it's not my idea, and I mentioned it before that the states were sort of collecting all the capital from all the world, and if we will see some things go south with the tariff situation, we could very well witness redistribution of capital, and eurozone could benefit from that. So that could be another example of anti-anthropic trade. Obviously, you do not execute solely on your conclusions, and I will not projections, and I will not do that. I will still use risk management, and I will seek for price confirmations. But the idea of the entropy arbitrage, I think it's a very good idea, and I will keep it in mind, and I will develop it, and we will discuss it more in the future. With that being said, have a great week. Let's be in touch. Bye bye.